Good evening. This is the Elliott Wave update for the S&P 500 for Wednesday, July 27th, 2022. As I ended up last night commenting on the update that we needed to leave open the potential and the possibility for the S&P to turn on a tick and head higher and break above 4,016, which was 25, I believe, which was the current high here. And it did so today, and it did in grand style. And it got up into the mid 4,000s, right? The high today was 4,047, 4,048, I believe it was. And now we're pulling back a little bit, but you can see probably a week ago, I talked about how the S&P needed to get itself above 4,000, hang out above 4,000, become comfortable with 4,000, find that warmth in whatever else they want to find with the security that they believe sitting at 4,000 provides them in terms of a launching pad to go even higher. Now, that might be the case, and it might just end up doing that. But this pattern now is getting very clean. Again, daily chart. I'm counting the first ABC on an intermediate degree, which will form the primary A wave. Within this finishing intermediate C wave, there will be 5 waves of minor degree, of which I have 1, 2, 3, and this is the 4th. It still might appear a little bit larger in comparison, but not so severely that I'm willing to change the count just yet. And so we're back to including that the market still has potential. In fact, yesterday I did discuss 40.75. And today we got right there into the center. We had 40.20 to 40.40 up to 50, and it got almost to the top of that level. Then we have 40.75. And then we have one after that, folks, and it's at 41.77. And then we actually don't have serious moving average resistance until 42.21, and that's going to be via the 200 EMA. Now, I seriously I would not expect the market to go that high and still be within this 4th wave. It would not be breaking any Elliott rules, but it would accept the look and the feel, which is not a rule, but it's more of a guideline. So I continue to just look for a completion of this C wave. And right now, let me go down to the hourly. So that if it doesn't look right on the hourly, I can go to the 4-hour and it would look very nice and clean. So let me go down to the 4-hour and see what it looks like. And we're just going to open this up until we can get inside. And here we are. So there's the B. 1, 2, 3, 4. Went deep, but as I said last night, did not overlap. Went deep, but it did not overlap. And it turned on its heels and it ran. And then when the Fed raised that interest rate 0.75 of a basis points and said that the necessity to do more is still evident, that inflation is being stubborn, et cetera, they bought more. And they took the S&P. It was up well over 100. And the Dow was up over 500. Now, within that last hour of trade and at really the after hour of trade, they took it down pretty strongly. And now they're basically down a little bit more. So they took it from that high at 40.43 and they dropped to 20, whereas in the NASDAQ, it did drop quite a bit more, dropped over 100. And in the Dow, it dropped over 100. So the S&P was a little bit more contained in terms of the depth of the selling that came after. So we still need to leave open the potential that this C wave and this internal wave 5 of C is still active. I believe we're really getting to a point where it's like, we're getting a little toppy and it's starting to turn. I would suspect that we likely will. But tomorrow you're going to see that likely going to hang out because we got Apple and we got Amazon, and everybody's like, well, there was Microsoft and there was Google, and they were both good. They both came back. We got to be looking at this. We got to do this. We got to do that. And that still is out there, and still this whole realm of thinking of, oh, interest rate hike, bullish. It's all behind us now. Bullish. We've been declining for 7 months. We need to rally. We're going to go. And to be honest with you folks, I get that feeling. I get the pressure. I believe we have one more drop. And the fact is, it's going to change this level because, again, now I'm moving my level to start this higher. So if I'm looking for a fifth wave, again, I can do it simple. So we have the retracements up. Let's just assume that 47 completed that pattern. And 42. So right there, and that's good. All right, so if that's the case, we've got to look at these on the inside that come down here. We're still in the hood, but you can see now we're up to 3,500. This additional rally brought up support to complete the intermediate wave C, and the primary wave A has now come up. So now we'd be looking, and that's assuming that this completed the pattern, we'd be looking at 3,504 down to 3,358. This set's still in there if it decides to go the full 100%, where wave 5 would be 100% of wave 3. And who knows? If they were able to do this and build up the momentum, that I think that this, as some people are saying, was the greatest short setup, because they forced all the shorts out. They truly did today. They forced the shorts out by just plowing in and pushing, and you got everyone to cover. So for tomorrow, I think we still need to leave room to the upside. We have 4,074 and then 4,176, and there probably have some points in between, but I don't think that many. I still believe that this is going to be wave 3, minor wave 3, and not the completion point for the intermediate wave C and the primary wave A. But again, I'm waiting. The market will let me know. I believe even on a 4-hour chart and also on the hourly chart, the threat to turn off of these levels is strong. How long they choose to hold off, because if tomorrow, then we have Friday, and that's expiration. So yes, the powers that be, the money that's out there, could still be sloshing around and being pushed around and going out of one stock and going into the other that can prop up an index and let others get out of a lot of trades. So let's trade the price action. Again, I do not take on a bullish or bearish bias when I'm trading. I trade the price action. I trade what's in front of me. I trade against the moving averages, against Fibonacci, against the Elliott count itself, putting parameters around it. And then I use elements of market profile, very important elements of market profile, which help me to place levels where supply and demand can be achieved. So today the demand was from the buy side. And after the Fed announcement, the demand was very strong. And so if the supply to sell is not there, and the demand, because they have to cover what they've sold, is there, it really brings a vacuum into play. And they're all coming in. And eventually it's going to reach the level where the orders get filled, because they're being put in at the market. And that's why you'll see these huge moves, just boom, 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 boom. And it's in the sense of why it happened makes it a little unusual. But how it happened, when you're putting it into like a market profile and just supply and demand, It made total sense. So again, I use that market profile elements of it, which are points of control, value area high, value area low, establishment of value area, how the market will move from a like value area high back down to point of control, back up to value area high, or from point of control, go down and test value area low. And it's just the playing between the buyers and the sellers within the value area. When supply and demand run out on one side, but this demand is still strong, then a new value area will be established as the market searches for that area. And there are previous value area highs that went unchallenged, or value area lows that go unchallenged, and naked points of control that basically just remained, did not get broken. So therefore, they kind of stay there, and then they become naked because they've not been challenged. And they'll just continue to draw a line on your chart to show you that. Well, this all gets programmed into algorithms. And when they're out on a hunt, that is where the numbers come in. So when I got 500, I got to go and buy them. Boom, I'm just taking them. I'll take it straight to that level if they have to. And you'll see it happen. And very often today, those levels were broken, and then they're going to run to the next level. And sure enough, they did. And they did it pretty quickly because of the demand that showed up after the Fed. And it was short covering. Anyway, for tomorrow, let's leave open that potential for continued rise to at least 4,074 should it get up there. Again, tomorrow we have Apple and Amazon, major reports. Today, everybody got to participate in this rally. I would assume that tomorrow will be supported by whatever happens in Apple and Amazon. And that could produce the next turn, because both, Amazon not so much, but Apple already has come out and said that inflation is going to affect how and what we report. Now, whether the market is going to choose to ignore that because we love Apple, that's up to the market. We can then adjust our levels because the computers will. Our system, our indicator will readjust value areas, and you trade accordingly. So again, not taking a bullish or not taking a bullish or bearish bias allows the trader to trade freely in both directions, and knowing when not to take a short or not to take a long, because you can see where supply and demand is taking things, and you can follow value. All right, I'm going to leave it there, folks. We have our marching orders. Again, downside, just to kind of put a cap on this, downside, it would truly need to break the 50s, break the 200s, break below 38, break below, and as quickly as it went up, it needs to come flying back down and get below this 50s and the 200. And I think if it can accomplish that in one swing, then I know that this is likely complete, and then we're going to go. Now, said that yesterday, and look what happened. So we're going to have to consider it to be just a little bit bigger. And if I go down to my hourly, that might help me a little bit more on my levels. So again, you can see we got the 4, we got the 8 at 4,000, basically. The 20, you can see they're pointing straight up at the moment, and still there's no let up in this strength right now. Although we can see momentum in other indicators, the stochastic momentum indicator, it's nosedive. So it's beginning to turn. And if that continues, then these will be broken, and they'll also hook and start heading lower. But major needs to break the 20 at 39.78, needs to break the 50s, which are 39.68 down to 59. Get them turned lower, and then break the 200s, which basically are now kissing each other right there at 39.35-ish. Like 33 dumped to 34, right in the hood. Now that could be a defining moment, and then again breaking below yesterday's area, which is at 39.13 before all this started. That would kind of put the cap that this is done, and we may be in that beginning of the minor fifth wave. More on that as it progresses. That's it for today. Our next update will be on Thursday, July the 28th.